look at the COT data as well today, and we can sort of see if we can make some assumptions about what's going to happen. Any questions, you can fire them in at any time you like, and we will look at specific things if you've got anything specific to look at. Otherwise, we'll just give it a general market overview. And really, I mean, no better place to start than the dollar, but I'm going to show you a way to look at COT data that doesn't really give you the dollar. It doesn't give you the DXY, which is the dollar futures. Hi, Lewis. How are you, mate? So yeah, we're not going to be able to look at the dollar directly, but we can look at it indirectly. So let's start with this, and I'm going to use this, and I'm going to use this. So if you go to investing.com, this is just a little trick for you guys, just to kind of like have a look at the COT data in a slightly easier fashion. If you go to investing.com, which I'm hoping you're seeing that screen right now, then what you can do is you can have a look down when you look at the calendar. If you look at the Friday's calendar, effectively the previous Friday, so you go to your calendar here. I'm going to bring this up. And when you go to your previous calendar there, you can bring up Friday. So the most recent Friday was the 19th. So if we bring up the 19th and apply, then what we're going to get is the data from Friday. And at the very, very end, what you'll see is this CFTC. So this is the commitment to trade, this is the COT data here. The futures COT data. So we can look down and you can see that there's the pound. Actually, I haven't got the pound, so we'll bring that up. There's the pound, there's aluminium, there's copper, corn, crude, gold, the Nasdaq, natural gas, the S&P, silver, soybeans, wheat, and then we get into a sort of like a load of the other foreign exchange data, the FX data. So you've got the CAD, the Swissy, the Aussie, the yen, the Kiwi, and the euro. As I say, it doesn't offer the dollar index, which is the DXY, but that doesn't really matter because by the time you've kind of gone through all the others, you'll get a pretty good feel of what's going on with the dollar. Now, the dollar has been net buying over the course of the last few weeks, and we kind of know that. We can see that in the charts, and we will look at the charts as well later on. But if we just have a quick look and see what's going on with the COT data here, this graph here just tells you straight away that the way you want to put your eye is, where's the zero line? And this tells you, are they net buyers or are they net sellers? And when it's in this area here, if it's above zero and growing, it's bullish. If it's above zero and peaking, and you'll know the peaks because they are met by previous peaks here, and you can go right the way back. You can scroll right the way back to 2009, I think, 2008 actually. So you can see these peaks here. So what happens during these peaks here is that's when it starts to turn around. So you can see that when it kind of gets up to the 50K mark on the pound, then it tends to be a little bit more. We have a short bias when it starts to peak around about the 50K. We tend to have a short bias, and this one actually reached 70K before we got the shorts come in. But if it is above zero and declining, that's going to be bearish. If it's above zero and growing, it's bullish. If it's peaking, it's bearish, and if it's troughing, it's bullish. So you can see here the trough, and then it started to grow up. But what you're really looking for with this one, it's really the first week where it declines is where you start to get interested on the short side. And that was on the 22nd of March. And if you have a look on the charts on the 22nd of March, now, if there are any questions on this, just fire them in. But let's have a look at the chart on the 22nd of March for the pound. and that was this period here. So that was suggesting it was going to start to drop down. This is the pound dollar, the week on week. So I'm looking at weekly charts because the COT data is released week on week. So that was telling you that there was a peak in the market and there was a chance of a decline. So we'd be picking it up on the lower high. We wouldn't be trying to pick it up here necessarily. We'll have a look at what that stated. That was the 3rd of March, which is a Friday, where the COT data is going to be released on the Tuesday, on the previous Tuesday. So if we go back to the COT data, then what we see here is the peak on the price was the 3rd of March, and actually this took one more leg up. This was still kind of going upwards, but you'd start to get very nervous in this area because it was starting to get towards that 50k mark. But this drop here is where we're starting to get interested. Now at this point, it's still dropping, so this is still kind of giving us a bearish signal, because the next leg, suggested by the trend of the COT data, suggests it's going to be below zero next week. So COT data suggests that there could be possible selling of the British pound. If we go to the euro, same thing. You know, this thing started to peak really at this point. First, it started to peak, but then it started to peak again around about 150k in December. And then it started to drop down quite aggressively. So if you look at the December mark, then let's see what date in December that was. 8th of December. 8th of December. Now let's see when we got the signal from the price action on the euro. The 24th of December. So they were still buying, they were still sort of looking at it peaked out on the COT data on this bar here. The very next week, there was a signal to trade to the downside with this high test bar, but it's not only that high test bar, there's also this resistance level here. So we know that it hit a resistance point, it put in a high, and then it's been dropping ever since on the COT data. So you can see that the speculators have been pretty good at actually picking this stuff out. Now they are still declining at this stage. And they're getting near that zero line, so it's still bearish for the euro. I think the issue really is going to start coming in, where we are going to be starting to draw our levels, and it might be that we're on a support line here, so maybe not quite as attractive. Much easier when the COT data has peaked and the price has peaked, and we get the signal from that. It's a much better way to kind of use the COT data, rather than looking in these areas. These areas just become just that little bit trickier to figure out. So the pound and the euro, I would read this as bearish, but with kind of caution. So cautiously bearish, particularly because of where price is. Look at what happened with the Kiwi. Now the Kiwi's actually done the opposite, in as much that the Kiwi down here looks like it may well have troughed. Now let's see where these troughs are. Well, it does actually go quite a bit lower, but the average looks like it's around about this area here. That looks like we are somewhere around the negative 20k kind of level for a trough. We get these huge moves here in 2018 and in 2019, kind of going into COVID, but the general kind of area looks like it's around about this between 10 and 20k negative. So if we see where we are now, we got to as low as -13, and we've just started to come up again. So this actually, I would see as more of a bullish signal, because it may well have troughed down here. It didn't come down as extremely as 20k, but it's between the 10 and 20, and it's just started to pick up again. And you can see what happens here. Look, this is where they're starting to buy. So we're really trying to look at these areas where it's got some room to travel. So that's a bit more bullish. Now, if we look at the chart on the Kiwi's quite interesting, because we've got this big sell-off here. which matches what happened with the COT data. Got the big sell-off there, but this is the point we are currently sat at. Now that may well be a signal that it's broken through. But what I'd really want to see here, and what would generate some upside, because it's possible that the COT data, as I say, has troughed and it's started to buy back up again. So what I really want to see now is a signal to buy, which we don't have. All we have is a potential area that could hold. So what I'd really like is to see something that came back inside this trend line to start with. That's the first point of call. And then, and this could take a week. We might not be trading it this week, but we've just got to be aware that, we're really trying to get out in front. And then another one that tests this area, but when it tests that area, rather than it being a break back through again, it actually creates something of a reversal bar. If it can do something like that, probably see those lows again. If it can create that reversal bar on this point here, on this line, then in 2 weeks' time, we would have a potential move to the upside. Now, it might be that, intraday traders want to take advantage next week if they see it pop back inside. The medium-term traders might be sort of quite keen and happy to put stops at the lows, or even down here and just see if it does go inside. Or people that are, maybe sort of willing to be a bit more patient and looking for a really big move, they might allow this to get it back above next week. The following week create some sort of pattern where it's tested this area, and it could look a lot of different ways. But if it's tested this area and it's closed above the area, then that might give us a signal for some upside, and we can look down at daily charts at that point and weekly chart, and 4-hourly charts, and see whether there's something. But the Kiwi looks the most interesting because it looks like the speculators may well have just possibly, well, they've definitely started to come back in a little bit. Will it create some genuine buying? We don't really know just yet. Yeah, that's a really good point, Lewis. Actually, is that we then can start pairing the Kiwi up with something else. It doesn't have to be Kiwi dollar, as Lewis quite rightly says. It might be that we could look at the pound Kiwi instead, or Euro Kiwi, or Kiwi Swiss, something like that. So we could look at it, because actually, if we look down at the Kiwi, pound Kiwi looks the same, similar, in as much that it may well have hit a high here. Let's have a look on the monthly, see if we can get a clearer picture. Not that clear there. I mean, these are great bars, aren't they? These are bars that are suggesting some selling from the pound Kiwi. So I like that, Lewis, a lot, actually. So we've got, if we kind of go back and see what the COT data is suggesting on that, that's really saying we've seen some buying last week from the Kiwi, and it may well have troughed. And the pound, we've seen a peak which has been selling for the last month and a half. So that would suggest downside. Now, I would expect you guys to have a look at your seasonal indicator as well, which I don't have on this platform here, but I can tell you sort of from the data, this week, the Kiwi tends to underperform the pound this week. So there's if the seasonal data is to be believed, that would suggest that there might be, from this point, one more push to the upside. Now, after that, going into the month, now that would be an interesting price point there. After going into the month after that, the pound does tend to weaken, but so does the Kiwi. So the pound Kiwi seasonally is quite sticky. The Kiwi does tend to underperform, incidentally, the pound. So not the best combination. COT data is showing a possible sell-off with a pound under zero, and maybe a climb above zero with the Kiwi, with the New Zealand dollar. But the seasonal charts do not back that up. So actually, not too attractive right now. The Swissy is possibly a little bit different with a pound, but we'll see what that looks like in a moment. Let's have a look at through some of the other COT data as well. Which one was I on there? Oh, this is where we were. Sorry, I don't think I had this shared. So this is the pound Kiwi. So we did see this bar on Friday and this bar on Wednesday. Definitely struggling to get through some support here, but the seasonal data suggests there might be just a little bit more upside in this. So not the easiest one to trade when the seasonal data doesn't agree. There's definitely some room to come down here. It definitely looks like there's some room to go higher as well. Hot data and seasonal data aren't really lining up too comfortably they're not too harmonized. So not a hugely attractive position. But let's see if there's anything else. So that was the Kiwi. The yen, big selling. Now the yen's another one. So even though there is no buying yet coming in with the yen, look at the lows down here. I mean, this is the lowest the yen has been in accordance to selling from the speculators for what looks like around about 8 years. Now this is quite dangerous because this does suggest the selling is going to continue. And this would have been reported Tuesday to Tuesday, which means it was reported between the 9th and the 16th of April. And on the weekend of the 12th, 13th, 14th, we know that there was the attack in the Middle East. And yet the yen as a safe haven currency was not net bought from the speculators. But it is a dangerous game now, sort of like trading the yen, short because because so many people are short. You know what happens when everybody's on one side of the boat? The boat capsizes, and we, who knows what the catalyst is going to be to take it in the opposite direction. So the yen's not really a hugely attractive position to take, and I'll show you some other bits with the yen in a moment. The Aussie also saw some selling, net selling last week. Is it at an extreme? Yes, it is. So the Aussies are at an extreme as well. Now, this one really, when it comes down to this could still stay subdued if global concerns continue, because the Aussie is related to growth, the yen is related to contraction. So the Aussie yen the COT data is saying stay away from that currency pair, which is a bit of a shame, and I'll show you why. And it's because if we look at the Aussie yen as a pair, technically, it's actually really attractive for some downside when we look at the short-term timeframes here. So this is the 4 hour. Struggled really to kind of get through. Now it could be that the trend line needs to be drawn there, but if we draw the trend line through the highs, that is suggesting some downside. We did see a big spike down. But again, this spike down and a huge buying back up again, that's not suggestive that the Aussie yen short is going to have too much of an easy ride of it. So speculators are basically saying do not buy the yen, but they're also saying do not buy the Aussie either. So that could be something that we need to look out for. Now, what we're really trying to find here is what the speculators are suggesting we should buy. They're suggesting a lot of selling, but they're not suggesting anything right now that we can buy. That's the Aussie. This is the Swissy. Again, selling off with the Swissy, but getting very, very near the absolute extreme, but it is in that extreme area. So this one again is not an attractive sell, because we know what happens at extremes. It just bounces back, and it bounces back hard. This one tends to be a net short position anyway, but it is very, very low down here. So Swiss is not great. The CAD took a huge sell last week. There was a lot of selling going on with the Canadian dollar last week. We saw The Bank of Canada hold interest rates. We've seen some pretty poor labour market data as well. So this is really all suggesting that, you know, there's still some longs to come with the dollar. Now, if we have a look at the dollar, you know, and you could sort of like say, okay, well, the pound is not as weak as the others, and nor is the euro, which would be fair. So you know, euro CAD is a possible solution to that, which would be, what's that look like? Yeah, it looks like there could be a bounce point coming in with the Euro CAD. So that would suggest that, you know, there could be some upside with the Euro CAD, but it's not really clear. But as I say, the dollar's the one. The dollar's saying sell Aussie dollar, which is not fantastic because we are again near these lows. So we're near technical lows here, but it is still suggesting sell it. It's selling buy the dollar CAD, and we're at technical highs, so that's no good. It's suggesting sell the Kiwi, but we're at technical lows. So that would be a buy area. And it's suggesting, you know, euro, not really sure what to do with it. But this one's probably the most attractive long, if anything, euro dollar and the pound dollar would be the two in accordance to COT data, because at least they are above zero. But that does look like there could be a bit further to come to the downside. And of course, buy the dollar yen as well. But again, breaking out to the upside, that would suggest a reversal. So all in all, when I sort of look at this data and I look at the charts, I think, wow, tough week coming up. Is there anything that we can sort of garner from anything else that could give us some clues about which way the market's going to go this week? Because this looks like a very confused looking picture with extremes being hit on the COT data and extremes in the opposite direction suggested by the price action. So I think it looks like a tough week so far. Now, if we go back to the investing.com and have a look at what the fundamental picture might be, the fundamental picture is here's okay. We'll look at next week. Is that right? Monday the 29th. No, we want to look at this week. Now we've got to look at what's going to move. What's the most likely thing to move the market? PMIs on Monday could move it around a little bit. Some inflation data from Canada could move the CAD round a little bit. But I think where it starts to get a bit more juicy, PMIs from Eurozone for sure. But where it gets a bit more juicy is here. Inflation data from Australia. So this might well shape which direction we want to take with the Aussie. We can still see some selling kind of coming in on the COT data. We see a technical area of support. So this would probably drive which direction the Aussie is going to go in the short term. The COT data won't care about the short term so much, but in the short term, where's that going? Any kind of jump in CPI data is probably going to push the Aussie higher, and any decline is probably going to push it lower. And depending on which way it's gone prior to the release will determine whether we're going to get a decent opportunity or not. And what I mean by that is if it's rallies, which is against what the COT data is saying, and then the number comes out weak, then we'll have a chance to sell it. But if it's sold off, and you know, in line with the COT data, and the number comes out weak, it won't be quite an easy, such an easy sell. So we've really now got to watch the charts and see where the opportunity lies. Is it opposite? You know, does the technical picture unfold opposite to what the release is going to be? Because if it does, we'll have a chance to trade it. ZEW expectations from Switzerland probably won't be too significant, and GDP from the United States could well be significant depending on how that comes out. They're expecting for a decline of 0.9% in GDP quarter on quarter. I'm not sure where that decline comes from because growth from America has been still pretty robust. But they are expecting a decline, even though they're still saying that there's going to be growth. But that's you know, that's a market mover for sure. CPI Tokyo, that could be a market mover, and PPI from Australia. But of course, the big number for the week is going to be the Bank of Japan, probably most likely the statement rather than the rate decision. That's probably going to stay where it is, but the statement could be very, very significant. Then we get some inflation data from the United States, along with University of Michigan consumer sentiment. So it's going to be a strange old week for releases in some respects. What we're looking for is some of these releases really to change the picture. If the Aussie's buying up, is CPI data weak enough to change the picture? And if it is, then we might have an Aussie yen short on our hands because of where it is technically. If it isn't, and let's say we get a jump in the Aussie data, then we can start looking at potentially some Aussie dollar longs. But the problem that the Australian dollar's got is that, as I said, it's associated with growth. And if we look at some of the other indications of market sentiment, look at the NASDAQ. It has just been absolutely obliterated over the last week. The last few weeks it was weakening, but this is a huge sell-off. When you kind of compare previous sell-offs, that bar's not as big. And you really have to go all the way back to 2021 before you kind of see a bar with that much selling. Tesla's numbers are pretty poor, so that hasn't helped the Nasdaq trying to remain positive. But if you're really sort of looking at where the structure of this thing is, then it's potentially got a reversal in and around this area, or it could come down even a little bit further, possibly even down to there, possibly down to the trend line. And now this would be Aussie yen bearish. It would be an Aussie yen bearish signal. Why haven't we seen this move yet? I'm not 100% sure. It might be down to the Bank of Japan's monetary policy situation, but that would start to push. If this remains weak coming into that data, that would start to push the Aussie yen short into focus. And you can see last week's bar was quite indecisive, but the previous week was a big sell-off. Last Friday's bar was very, very bullish in the respects of it tested some areas down here, tested this low on the trend line, and bounced back very, very convincingly. So there are some buyers here with the Aussie yen, but we are ultimately looking at an area here where there was some support, a break, and a lower high. So we're still kind of in this kind of lower high sort of region, and that would be of interest to me to potentially sell. But I think we need to wait until Wednesday until we get that CPI data. Or some further developments on global concerns before we really look at this one. Okay, so that really is going to conclude the market wrap, unless there are any questions or any comments that you want me to maybe look at, any currency pairs that we want to look at in a bit more detail. I'm quite happy to do that. I've left a few minutes at the end to do that, but if not, then I will let you guys get on with your Sunday. And really, to trying to conclude the overall ideas here. The idea really is that going into next week, there is a lot of clouded data, which means that jumping into positions is going to be that little bit harder on Monday and Tuesday. The picture might become a bit clearer on Wednesday when we start to get CPI data from Australia and some inflation data from Canada before. So there might be opportunities, but you're going to have to look at the data, because the COT data is really, and seasonal data is still suggesting dollar long. The technical picture is showing that the dollar is quite near overbought levels, and that's where we've got a little bit of disharmony, if you like, and a bit of a disconnect. So so the data is going to have to kind of reveal whether we're still dollar bulls or whether we're about to get a big reversal, because COT data is at an extreme. So we've got to tread with caution in these kind of environments. So if there are no questions, I will see you guys Anything goes, just go long gold, Lewis is saying. Well, there's always that option. There is always that option, and gold does tend to be, or seems to be on a bit of a ripper right now. Some negativity coming in though, no question. Gold's just not attractive when it comes down to price. That's the big problem, and the parabolic move has not helped. So even that is going to be no picnic. Right, see you tomorrow, Paul P. You are welcome, Lewis. Have a great rest of your weekend, guys. And I will see you tomorrow in the Trading Buddies show. And if you're not able to make it there, then I will see you guys as soon as the next time I'm scheduled to meet.